Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup of the day as well as what the strategies should you follow from top market experts who will be joining us in a bit. Remember that after an impressive 7-day winning streak, the benchmark indices, both the Nifty and Sensex, did slip minor points in yesterday's trading session on the monthly derivatives expiry session, that is. And of course, as we move forward to today, of course, the market's attention will be to earnings reports. Many companies will be reporting their earnings today, and of course over the weekend as well. We'll see Reliance Industries, Maruti, Hindustan Zinc, Dr. Lal Path Labs, Shriram Finance, DCB Bank, Bank of Maharashtra. A whole host of big earnings are going to be coming in. Of course, we'll be also looking at how the global setup has been overnight and in the Asian markets as well. In the US, we've seen the S&P 500 end up 2% higher overnight. The Nasdaq Composite add about 2.7% in trade, and the Dow Jones average also gained by about 1.2% odd. Markets in the Asian markets also were mostly higher this morning, tracking the gains on the Wall Street in the US as various countries are making progress to strike a trade deal with the US on the tariff front as well. Now, Japan's benchmark index, Nikkei, was up by 0.9% in the early trade deals. We've also seen South Korea's Kospi add by about over 1%. Australian markets, however, are closed today as well. Now, when we look at how the foreign flows have been, we have been seeing some signs of a pickup from the foreign investors into the Indian markets, and they've continued to be net buyers even as of yesterday's session. That means 7 consecutive sessions of buying happening from FPI side. They've acquired stocks worth about 8,250 odd crore rupees coming in from the FPIs, the highest buying activity since March of 27th. Now, domestic institutional investors, however, remain net sellers for the third consecutive day, and they sold off equities worth 534 odd crore rupees. So that will be important to watch out for as well. Apart from that, we'll be looking at these whole host of earnings that have come in over yesterday after the market hours, and that will be seeing a reaction today. Axis Bank's Q4 standalone YOY numbers show that the net profit was flattish at around 7,117 odd crore rupees, and the net interest income was up by 6% at 13,811 crores. What we've also seen is that the net interest margin came in at 3.97%, up just minor 4 basis points. We've also seen that the provisions have also slightly inched higher. Gross NPAs came in lower at 1.28%, which means there's an improvement sequentially. Even on the net NPA front, slight improvement could be seen at 0.33% levels versus 0.35% on a sequential basis again. Cyient, although, has actually had slightly weaker quarter. Revenue was down 0.9% at 1,909 odd crores. EBIT was up 11.2%. Margins came in at 12.3% versus 11%. Net profit, however, was up by about nearly 39 odd percent. The company has recommended a final dividend of 14 rupees per share. We've seen Tech Mahindra's results as well. Q4 FY25 consolidated sequential results show that the revenue was up by 0.7% at 13,384 odd crores. What we've also seen is that the net profit was up by about 18.7% at 1167 crores. We've also noticed that the company's EBIT was improving by 22 odd percent at 1378 odd crores as well. Margins came in just flat with a positive bias, 10.3% versus 10.2% there. We've also seen the profit after tax has grown on the back of the rise in other income over this space. L&T Technology Services, again from the IT pack, consolidated QOQ numbers show that the revenue was up by 12.4% at 2,982 crore rupees. We've also seen the net profit, however, inched down by 3.4% odd at 311 crores. EBIT was down by 6.6%, and we've also seen the margins come in lower at 13.2% versus 15.9%. So you could be seeing some dampening on the sentiments on the stock. From the power space, IEX will be in focus. Revenue up by about 16.7%, although this is slightly lower than the estimates. Net profit also improved by 18 odd percent to 112 odd crores. EBITDA improved by 16%, and we'll also look at the margins that are flattish at 86.3 odd percent. Tanla Platforms came out with the numbers. Revenue up 2.4% here. EBIT, however, was down by 1.4%. Margins also down by 52 basis points odd for the company. Macro tech developers from the real estate space will also be in focus here. The Q4 FY25 highlights include from the consolidated YOY numbers that the revenue inched up higher by 5 odd percent, EBITDA was up by 16%, margins expanded to 28.9% from 26%, net profit was up by 38.5% to 922 crores. So good set of numbers coming in. But from the IT pack, what I'm looking at is Emphasis today. Strong set of numbers really coming in from Emphasis. Consolidated QOQ numbers coming in, revenue up by 4.2%. What we've also seen is that EBIT is up by 4 odd percent here. Margins, although flat, coming in at 15.3% odd. The net profit has also improved 4.2%. Even the deal wins are at a multi-quarter high for the company as well. So that's one stock that I'm watching out for. Let's welcome our guest on board. We are now joined by Mr. Mayuresh Joshi from William O'Neill, India, joining in. He's the head of equity research there. Warm welcome to you, Mayuresh. Good to have you with us. Well, we've had spectacular 7 days of a run-up in the markets, slight softness yesterday, but things on a macro front have been improving on the tariff. That has been the bigger concern over the last 1.5 months for us. Even though domestically the geopolitical tensions have been tad dampener as well. What's the fresh perspective on the markets after this entire 1 week?
Morning, Sakshi. No, two things. One, I think as far as the tariff impositions are concerned, there seems to be some element of clawback that is now creeping in as far as Trump policies and the administration is concerned. And the markets are heaving a huge sigh of relief across the globe. The second element, obviously, is in terms of corporate earnings itself. So outside macros, how do corporate earnings play out, specifically in the Indian context? It's been decent so far. I think banks have produced a decent set of numbers. IT stocks, barring a few large names, have been decent in terms of how numbers have probably played out. Again, I think expectation largely getting built in that Q4 will be largely soft. But expectations of the tax cuts will imply that consumption comes back very, very strongly in the first half. So there will be a case made for base building happening as far as corporate earnings are concerned in the first half. With every possibility of a normalized monsoon, rural and semi-urban consumption should come back very, very smartly as well. And therefore, I think consumption with the expectations of government capex, the liquidity that RBI is probably providing at this juncture, macros holding up as far as tax collections are concerned because of food prices, trade deficit expected to remain lower. I think these are all positives as far as the Indian economy is concerned. However, I think how negotiations take place in the next 2.5 months in that 90-day period that Trump has announced, what happens with tariffs in China, and the final outcome of all these factors put together will probably lay a base case scenario on how markets will probably go. So the markets are rejoicing every moment as we speak at this juncture. If nothing comes out which is detrimental over the next 2.5 months as far as tariffs are concerned, my own sense is that even global macros should start bottoming out as we head into the second half of this calendar year. And because India's positioning macro and micro-wise remains very, very strong, I think we might actually become outperformers again as far as the rest of the globe is concerned. So I think I maintain my positive stance as far as India is concerned.
Absolutely. Let's actually just look at how the pre-open is shaping up. On the lower end, 150 points of a cut, 24,092 can be seen here. 0.6% of a loss. That's despite the global setup being slightly on the positive zone. So we are now nearing 24,000 levels again. Let's hope that this improves for the better. But we'll come back to a whole host of numbers and names there. Mayuresh, IT is something that I want to start off with. We have been discussing about the IT pack over the last 1.5-2 months odd. The perspective has largely been whether IT space will be, the most vulnerable of sorts, because of the trade deal shaping up. Now, when most of the big heavyweight earnings have come out, what is your, you look at how the IT sector is shaping up? Have the earnings largely come in line? Has there been, a specific disappointment, if any? And where are you seeing some encouraging signs as well, Mayuresh?
So Sakshi, again, I think expected to be a soft set of numbers, and it has been, but specifically for the large names. So whether you look at TCS, whether you look at Infosys, whether you look at Wipro, even Tech Mahindra to a certain extent, I think the numbers which were expected, they have come a tad bit lower, and that was expected. There was no two ways about it. Obviously, I think the general thesis so far has been that client order wins, client discretionary spending patterns might get delayed, deferred, and that probably takes a hit in terms of the dollar revenue growth, the constant currency revenue growth as well. And that is what the companies are probably guiding for. They're guiding for a softest start to the financial year. However, I think, again, coming back to the point in terms of what probably happens with tariffs, discretionary spending back in the US, Europe, and specific areas like BFSI, retail, manufacturing, how do they shape up in the next few months are going to be extremely critical for the sector as a whole. However, the street is trying to pencil in that in the second half of this financial year, things will be relatively better for the sector as a whole. And if things probably improve as far as tariffs are concerned and resolutions are obtained, consumer discretionary spending can come back very, very strongly. Having said that, I think a few numbers which have been outliers. Obviously, HCL Tech better than what the street probably expected. Persistent has given a decent set of numbers as we speak. And you were just mentioning emphasis. I've time and again mentioned that this is one stock out of the mid-cap IT space that we always keep on our watch list and our radar. Again, very strong commentary, expectations in terms of the AI part of the portfolio, which I've been harping about time and again, is now almost 55, 60 odd percent, even more. And therefore, I think the kind of Gen AI deals that emphasis can probably generate the value additions in terms of AI streams that is coming through. I think that will reflect positively in terms of margins. The deal wins have been very, very superior as we speak. And therefore, I think a few stocks might be actual outliers in the entire space. So a few large cap names might struggle, but a few names, as I mentioned, which have given decent set of numbers and decent commentaries and it looks decently poised, might actually have the momentum going on like a persistent or an emphasis.
Absolutely. So that's as far as the IT space is concerned. The big boy Reliance Industries will be coming out with the numbers today. Meresh, what exactly would you be expecting here? The run up to this earnings has been actually pretty volatile to a little on the milder side as well. Last one entire year has been tepid one for Reliance Industries. What is it that you would expect from the earnings that could provide fillip to the stock price as well?
No, so again, the upstream business is expected to remain soft. There is no two ways about it. You look at how crude pricing is, you look at how the delta spreads have played out across the value chain as far as the downstream pricing is concerned. So the upstream stroke downstream business for Reliance is expected to remain soft. For Geo, again, the expectation is that there will be a slight increase in ARPUs, anywhere between 205 to 208 odd rupees. Subscription addition should be decent enough of what we've seen from the recorded data that these companies post. Retail business sequentially should also fare better as we speak. And therefore, the retail-oriented businesses, whether it's Reliance Retail, whether it's Jio, should have a better showing, which will offset the weakness from the upstream and the downstream business. When it comes to new energy businesses, including the bio units, expectations in terms of how that is playing out is something that the street will like to watch out for. But generally, I think it should be an okay set of numbers for Reliance. No fireworks. Let's see what the actual numbers are.
Absolutely, we'll keep an eye out on that too. From the other heavyweights that we are going to be looking out for is Maruti Suzuki from the auto pack as well. What are the big expectations there, especially when we talk about, what's gone behind? Is a lot of uncertainty around what will happen on the auto tariffs again, with the kind of exports that have been coming in. Of course, EVs will be important to watch out for, how the company is really stepping on the pedal on that. Competition is surging. More players from global space are also entering the space with entering Indian markets with a big lineup as well. So how is Maruti Suzuki really placed?
All these factors are extremely valid, Sakshi, that you've put forth. And therefore, I think the value addition that Maruti has got is right from entry level to the hybrid or the SUV part, which are now expected to launch in the next few months with new models expected to come through. Again, the sales and the distribution network is superb. So I think nobody can replicate that as far as the auto universe is concerned. Yes, competition is there. Pricing will remain tough, specifically for the higher end models. And therefore, how demand probably plays out is going to be extremely critical in the next few quarters. With more launches expected, inventory is already decent enough at the dealer end. Prices have got increased because of input cost inflation that we've probably seen. And therefore, how demand dynamics play out in terms of overall volumes amidst all these factors put together is something to be watched out for. So my own sense is that anybody holding can definitely hold on to the stock with a longer term horizon because there will be appetite in terms of the entry points, the price points that Maruti offer with its cars. And as the aspiration of India probably grows, I think it's going to obviously grow from the bottom up of the value chain and not from the top end. The top end has remained extremely strong, Sakshi, as far as SUVs are concerned, luxury cars are concerned. And therefore, my own sense is that anybody holding on can hold on. But I think within the space, two-wheelers, in my opinion, are a tad bit better placed. Again, the same logic being applied, consumption coming back very, very strongly. And therefore, two-wheelers might benefit a tad bit more compared to the four-wheelers.
Fair point. Just shifting back on the pre-open space, it has settled now 24,289. This is far better than what the opening pre-open tick was. So 42 points higher. We are back into the green now, inching closer to 24,300. That seems to be a much better level to really look at. Sectorally, the action also looks pretty positive across the board, barring just slight losses that you could probably see on private banks. But we'll see how it really opens up. On the focus on the Nifty stocks today, SBI Life could be in focus. Tech Mahindra, Hindalco, TCS, JSW Steel, some of the stocks that are actually looking up. IT space could again be in focus. Realty space could again be in focus. Metals, even the broader markets could actually show you some kind of signs on the higher side. So we'll come back to all these names and numbers as they come in as far as the open is concerned. But two or three more spaces that I want to discuss before the markets open with you, Mahesh. One is the return of the FIIs. How are you looking at the past 7 days of consecutive buying from the FPIs? What does that hint? I mean, yesterday's figure was pretty big as well. What exactly would you really anticipate from the FIIs from here on? Are they back for good?
Two things, Sakshi. I think one, assuming that the resolutions on tariff takes place over the next 2.5 months, there will be some flows that probably go to the US because I think the base case that is getting made right now is it will impact the US economy. There will be a recessionary condition around, whether it's mild or whether it's a very strong recession. Time will only say what policies are getting adopted. However, I think when you're probably talking about how the positioning of the globe is at this juncture, and when you probably map macros and micros combined together, I think India seems to be very, very strongly placed on these factors I just said in my opening remarks. And therefore, from an FII stroke FPI perspective, if there is some element of diversification that needs to be done, they will probably have a choice between India and the US at this juncture. Obviously, they are well invested in the US. If you look aside outside India in terms of emerging economies, a large part of those emerging economies, ex-China, are largely commodity driven. Again, what tariffs play a part in terms of pricing, inflation, growth dynamics is something to be seen. But the three main aspects, consumption, investments, and growth, are all there in India. I think consumption expected to come back strongly. Government, government capex is very, very strong as we speak. And as domestic consumption picks up, private capex and gross fixed capital formation should come back very, very strongly and well. And therefore, GDP will be impacted far lesser, even in this aftermath or any kind of a global macro situation, as far as the rest of the globe is concerned. So I think FIs and PIs largely don't have much of a choice. I think India probably
Yeah.
remains a better destination than most of them in the global.
Okay, so that's as far as the FIS space is concerned. And now I want to come closer home and something that I just mentioned, the geopolitical tensions that have emerged between India and Pakistan after the Pahalgam attack. Things are now turning worse on the economic front as well. We are actually going strict with Pakistan, and Pakistan is also talking about, halting all kinds of trade ties with India as well. I mean, through the Atari border closure, there is an expectation of that 3,800 crore rupees of Indo-Pak trade could be hit via that route as well. Pakistan has suspended all trade ties with India, including the third countries, completely halting the two-way commerce, which slowed down already since 2019 Pulwama attack as well. So how are you really navigating through all this? What could be the real impact of all this now?
First of all, Sakshi, I would like to say that it was a horrendous attack. So I think paying homage to all the families who got affected. And whatever response comes through from India, I think is extremely valid in my opinion. Secondly, I think we are hardly bothered on the economic front with Pakistan. I think they are in a much worse state if they want to break off ties with India and are absolutely fine with it. So absolutely not bothered with what happens with Pakistan on the economic front. And it does not create an inch of any kind of a delta destruction as far as India's GDP is concerned.
Fair point. So not really bothered about it at this point in time. More important for us to really look at where our exports and our trade ties are much better and bigger
Yeah,
with bigger countries. So I think that's more
right.
important. Really watch out for. This does not give us any importance because at this point in time, what's more important is how we pay homage and tribute to all the families who have been hurt and the families of the victims as well. That's more important at this point in time. Nevertheless, let's go on to talking about the trade globally then. You did say that, Trump has softened his stance on the tariff talk of late. From the last few days, we have been seeing a softer stance there, even on China, not just worldwide, but where the hit was hardest at 245% odd for some of the goods between China. He was very, very stern earlier, but now things are actually softening. So how would you really look at that aspect? Because India was actually looking at that opportunity that would get created because of higher tariffs in China and all the other Asian countries vis-a-vis us, because we were thinking that we have better negotiating skills and we'll be better off then, and we can create certain opportunities for us there. Softening stance on China will definitely benefit globally, but how do you anticipate what happens with India, and thereof what is the impact of China softening as well?
So I think if you look at the sectoral impacts, actually, in terms of tariff imposition, I think India is still better off. And if the tariff imposition still come through at a lower rate, India will still be better off. Again, let's have this perspective that when you're looking at corporates, a lot of clients in Europe, in America, are also looking at China plus one very, very seriously. Government has already announced PLI for a whole host of sectors, including electronics, including textiles, as an example, where there is a bulk of our exports which probably goes outside ex services. And therefore, I think as we improve our backward integration operations, our supply chains as well, we become strict. We might not become the strongest competitor, but there are alternatives that is available to global clients as far as India is concerned. And that opens a pool of sectoral opportunities for Indian corporates as well. So, yeah, I think India still stands to benefit. The China plus one theme is genuinely there across the globe. And therefore, I think as we improve our backward integration capacity and supply chains over the next few quarters, India will benefit. Again, outside US, India is also doing trade agreements with the UK, with Australia. I think that is expected to benefit us as well.
Okay. We'll definitely keep an eye out on that too. Mitesh Panchal is joining in. Let's quickly welcome him before the markets open. He's going to be tracking the technicals for us. Good morning to you, Mitesh. Good to have you with us. If you could quickly tell us, it's the beginning of the May series. How do you expect the series to pan out? What's going to be important to watch?
Good morning, Sakshi. Good morning, Muresh bhai. Good morning to all our viewers. So, cautiously optimistic is the caption which we have sent to all our traders for the May expiry. Reason being
Okay.
is this that if you look at the bounce from the level of around uh, from the level of 21,743, where the recent low has formed on 7th of April 2025. It's a vertical rally, and since last 3 days, indices are struggling at the high level. Today, we might see a bit of a gap up, but I think going forward, it will not sustain, and we may see a good amount of profit booking. Sakshi, we are looking at around 3 to 5% correction in the month of May. So one need to be very cautious with respect to the frontline indices. Apart from that, what we are looking at is that there are strong possibilities of metal sector to bounce and IT sector to bounce. So we are looking at two sector specific opportunities right now. But broader market, we are of the view that we are here for a very strong correction in the month of, for the May series.
Fair point. We'll keep an eye out on that. Markets have started to take higher, so that's a welcome note. 90 points up in trade, 24,336 on the Nifty is what we have, viewers. It's going strong at this point. All the sectors, barring private banks, are up and about in trade. Let's look at the Nifty bank as well. How is that one really trading at this point in time? If we look at only the private banks between the three constituents are down by 0.2%, and the Nifty bank is opening about 0.25% higher in trade. But the real estate sector is the top moving sector right now, 1% up in trade almost. Metals also up by about 0.6% odd in trade. Let's also pull up some of the other sectors. Pharma, remember it picked up pace yesterday, another 0.6% higher in trade today. Autos, consumer durables, financial services are up. You also see mid and the small caps now up in trade, 0.3, 0.4% higher. On the Nifty, you have SBI Life Insurance as the top mover in trade today. You have an 8.7% uptick coming in on SBI Life. 1751. HDFC Life follows next, 2.8% higher for this one. TCS is another one that's moving up, 1.3% higher. You have Eternal coming up, 237. Remember, yesterday it closed with losses. Shriram Finance also up by about 1%. These are the top 5 movers on the Nifty. In fact, there are only about 5-6 stocks that are lower in trade, but rest of the stocks are up on the Nifty. Axis Bank is lower after the earnings, 3.7% lower in trade. Tech Mahindra after earnings, 1.8% lower. Nestle after earnings yesterday again drag 0.6% lower in trade. IndusInd Bank, Power Grid, Bajaj Finance is also trending lower at this point in time. But what's buzzing in the F&O space? SBI Life. You have IEX post earnings 3.5% higher. Macrotech Developers post earnings, that's also up. And you also have Vodafone, that's now slowly and gradually inching up. What's not doing well in F&O? Cyient. We told you that this is a stock that will disappoint because of the earnings, and 10% lower on the F&O space is what you see this one. SBI Cards, another one, 4.5-5%. Again, earnings impact. Axis Bank, Laurus Labs is another one that's actually opening on a lower end. Mitesh, how do you see the opening today?
So far, so good. So nothing exciting. As I said, one need to be extremely cautious at the high level. And we are of the view that if you have recently participated, if you're running with a profit in any of your trade, advisable to book. Still, we believe that 109 points of a gap up will not sustain going forward, and we may see a good amount of correction in the next 1 week or so. So we are absolutely cautious at this point of time. One need to be very careful in selection of the stocks.
One has to be very, very careful on the selection on the stocks at this point in time. Mayuresh, SBI Life, top mover, 9.5% higher. What would you say on this one? And the entire insurance basket as well.
So strong set of numbers, and I've always maintained that out of the life insurance pack, SBI Life probably remains right on top of the stack. Primarily for 3 reasons. One, I think the product mix that they've got is reasonable compared to the other players. Second, I think in terms of their overall commission structure, is one of the lowest in the life insurance industry. They are in high single digits compared to high double digits, in fact 20-21% for its peers. Third, obviously, I think the commonality that probably remains in terms of bank insurance. SBI Life has a huge parentage with SBI and its network, and therefore I think with the expectations in terms of APEs expected to remain stable, the VNB beat has been very, very significant. The expectations of VNB margins remaining at elevated levels, and therefore improvement in the embedded value probably is a thesis that the markets is working out for. So anybody holding on SBI Life should.
Okay, SBI Life should definitely be held on to. Let's take Mitesh's view. Mitesh, HDFC or SBI Life, which chart do you look at more positively, and where do you think more better risk reward can be seen after this move?
Absolutely, SBI Life. I am of the view that above 1720, 1720, that is strong breakout on hourly chart. And now the stock is entered into a new trading range in which stock will trade above 1850 and 1900. So we are of the view that among these two, one should go ahead with SBI Life.
Okay, another stock, Mitesh, that I want you to watch out for is the Vodafone Idea. 1.44% of equity has exchanged hands. You are seeing a 3% up move on Vodafone Idea, 8.18 levels. How would you look at it as a trading idea?
First of all, as a trading idea, absolutely no big no. Reason being is this that the lot size is too big. Apart from that, if you look at the chart pattern of last 1 quarter, so actually there are absolutely haphazard move. So even
Yes.
technicals to an extent is not working in the stock. This is purely driven based on the news. So advisable that one should completely avoid this stock either on the buy side or on the sell side.
Fair point. Okay, 103 crore shares. That's 1.44% equity worth 823 odd crore rupees has exchanged hands at 8 rupees per share. This is via a block deal that's taken place, and that's why you see this move, but completely avoidable as a trading idea at this point in time is what Mitesh is of the view. We'll go back to Mayuresh to discuss about more spaces where we can continue to find some value. Mayuresh, earnings, in thick action. Where do you think investors can actually bet on improving earnings from here on?
No, so my own sense is that is it specifically for IT, Sakshi?
No, overall, IT we have discussed. So overall earnings, whatever earnings have come in thus far, have they given you any kind of early signs of things improving from here on?
No, so again, as I said, BFSI looks decent. From
BFSI, yeah.
consumption pack, the expectation is always that Q4 will be soft. So if somebody is going in with expectations that FMCG stroke consumption basket should have a decent Q4, I think that's not going to happen. But the expectation with all the macros getting built up, the tailwinds that are coming through, is poising, is helping that it is poised for a good growth going forward. So I think consumption related, select FMCG stocks, select footwear stocks, select apparel makers might actually do well. The commentaries and the initial data points are hinting at that. So the initial set of numbers, BFSI as a space and a few of these consumption related spaces might actually do well.
Fair point. Now, real estate is something that let's look at because it's the top moving space, a percent higher in trade. Macro tech definitely is leading the space at this point in time. Mitesh, would you be a buyer on macro tech despite the moves that we have already seen? Earnings have been good and therefore 3.5% uptick even today.
Not microtech, but I think one should go ahead with two stocks. First, as of now, we like DLF a lot because from the low of 603, it has a nice and a decent bounce, and now it is a bit of a resistance at 695. Sorry, 695, yeah. But it will cross and then stock will enter into a new trading range at between 720 and 730. Second stock which we are looking at is Godrej Properties. If you are looking at the chart of Godrej Properties, before 2 days, it had given a very strong up move to the tune of 2097. I'm talking about 22nd of April 2025. And since then, there is a high top, higher bottom formation on the daily chart. So we are of the view that growth property from here on can climb up to the level of 2250 to 2300. So two stocks from the reality space, which we like technically right now. First is DLF, second is growth properties.
Okay, noted that. Let's look at some of the other aspects. So IT is picking up pace in a strong way now. The IT sector is pulling up in trade. We have now almost 1.2% higher for the IT stocks. Among the front lines that are contributing are definitely Infosys and TCS, even HCL Tech as well. And in the mid-cap space, you have Persistent, Emphasis, Coforge, all of them also pulling up in pace. Now, Mayuresh, if I have to ask you for a pecking order, what would that be in the IT space? There's a move across the board, and we've been seeing that carrying on for the last 1 week.
So again, I think on the large names, HCL Tech has been reasonable, but I think the mid-cap space, persistent emphasis, I think these are two names
Okay.
that.
Persistent and emphasis, we'll definitely look at it. Okay, fair. Mitesh, how about IEX? It's been a volatile past for this one. After the earnings, there is some kind of a move, but that gives you any confidence of stepping in?
See, as far as IT stocks are concerned, we only have, sorry, as far as IEX is concerned, yeah, above 100 and 203, there is a strong breakout, Sakshi. So we'll wait and watch. Right now, the stock is trading at 199.
Yeah.
So about 203 will definitely be a buyer. And in that case, the target which sets on the chart is 220, 230 with a stop of 195. So let's wait and watch if the stock are likely to trade on 15 minutes or half an hour chart about 203. Yeah, definitely it's a buyer candidate.
Okay, fair point. So we'll keep that in mind. Let's look at the broadest index. Any interesting names here that we can really mark for, both Mayuresh and Mitesh to really see at this point in time? Not many. It's BGR Energy, Sadbhav Engineering, only such kind of names. Kesoram Industries, maybe. Very, very few, far between names are actually up in trade. Let's go back. Let's discuss some of the other aspects. Pharma, let's discuss this. There was a move yesterday we saw across the board, diagnostic space led by Davis Laboratories, frontline counters led by Cipla. Natco Pharma is again coming back, Mankind Pharma is again coming back. You're seeing a lot of move across the board. Mayuresh, what's next for the pharma names?
Well, still maintain my stance. Even when Trump probably announced,
Yes.
we were of the opinion that pharma will continue doing well. He just cannot do acquisitions on any sector that he pleases. And therefore, I think the pipeline that a lot of these leadership pharma stocks have created in terms of NDAs, in terms of FTFs, are in the right direction. Obviously, I think the phase 3 trials are going on for a few of these drugs as well. Again, a multi-million dollar opportunity with better margins. And therefore, the monetization can be pretty large for these companies as well. At a decent pricing for the US consumers as well. Let's not forget that, which is extremely critical. And therefore, I think names like the Sun Pharma as an example, Cipla as an example, we continue holding that in our global portfolios. Within the mid-cap names, I think Strides Pharma, with the
Okay.
merger that is expected to take place, the dynamics are going to change quite
Okay.
significantly. And therefore, I think the numbers will be relatively better from a balance sheet perspective. Generally, I think it should do well, but selectively, I think these stocks can perform better.
Okay. Mitesh, your top choice from Pharma, what would that be?
So two stocks. First is a looping. I think the kind of the chart formation it had before 3 days. It had a hard top high for bottom formation since last four trading sessions, and now trading at its immediate resistance levels of 2120 Once 2150 is taken out on the upside, then the stock will move to the tune of 2400. Second, very interesting bet which we are looking at, which is panning out on the chart, is Glenmark Pharma. So if you're looking
Okay.
at the chart of Glenmark Farm, again the similar chart pattern like looping since last four trading sessions, heart of higher bottom formation, and now it is comfortably trading about the immediate resistance and psychological level of 1400. So what we are looking at in Glenmark Pharma is 1480, 1530. So Lupin and Glenmark Pharma is looking very promising at this point of time.
Okay, we'll definitely look at that as well. Let's also focus on what's not doing well in trade, and one of the spaces which is actually slightly on the softer side is FMCG, and I wanted to pick that up with Mayuresh. We've seen HUL and Nestle both earnings coming through. We've been talking about whether consumption could be the theme that we should be looking at for the new fiscal year. Anything is changing here post the earnings? Are there any worrying signs that you would probably want to stare at with caution?
This is with a lag, right? This is what has happened in the past. And now, if you have a forward-looking estimate to be done, there is every hope and expectation that consumption should start picking up. And therefore, I think the two aspects for FMCG companies, rural consumption and pricing, they should come back very, very strongly. With better monsoons, as I mentioned earlier,
Yeah.
rural consumption should come back very, very strongly. It accounts for 55 to 60% of the overall FMCG volumes. And therefore, as they come back very, very strongly, the kind of impact that we've seen in the previous few quarters with grammage reduction, more SKUs getting announced, some element of input costs being absorbed, and therefore margins probably getting affected, all that might reverse. And if that reverses, with demand and pricing expected to remain in favor of FMCG companies, obviously I think operating leverage kicks in. The free cash flows which are used in the past should start improving. And as the consumption cycle evolves, I think these companies should benefit with the evolving consumption cycle. So I think all these numbers have been a lag in terms of what has been reported in the past in the quarter gone by. But my own expectation is that the first half of this financial year, there will be a good base building that probably happens. And the second half, I think you should see significant amount of improvement as far as earnings is concerned. So I think not overly pessimistic on FMCG, selectively positive for the entire space as far as forward-looking numbers are concerned.
Okay, fair point. We'll definitely keep an eye out on that. Time to thank you then, Mayuresh, for being with us on the show. And it's always a pleasure to listen to your fantastic insights. Hope you have a great weekend ahead, and we'll see you soon in the next week. Thank you so much for being with us.
Pleasure
Mitesh,
to be with you.
thank you, Mayuresh. We'll continue our conversation with Mitesh now, especially on the 52-week highs. I wanted to bring your attention today on BSE first. 6555. That's the number that we are looking at. Capital market story again going strong. We've been seeing over the last 1 week many stocks pulling up in trade. We've seen CDSL, we've seen 361 WAM, we've seen Angel One, K Fintech. All of these stocks have been buzzing, but BSE has been a consistent one that's been moving up slowly and gradually and inching back to those, clawing back to those erstwhile levels that we have seen. I think it has been a smart recovery from about 5,000 odd levels and thereafter now at 6,500 odd or so. How are you looking at the capital market story? How is BSE placed there? Would you be a buyer at 52-week high?
Absolutely. See, it's a very good point. Now, when the overall outlook is cautious, generally this has been the theme, Shakshi, that the capital market themes are picking up space. So when there are no themes available in the market, generally the CAMS and the CDSL kind of stocks, BSC, then we have all the EMC company which are listed on the exchanges. Apart from that, the broking firms, these themes are generally picking up the space and buzzing. But I'm of the view that this is not the right time to get into BSC. If you look at the chart pattern on 24th of January 2025, it made an all-time high of 6133. From there, it has given a very strong and sharp a sell-off of around 40 to 45% and made a low of 3682. And if you look at the a weekly chart pattern, in just a matter of 6 weeks, all the losses have recovered and it is now trading at an all-time high. Such sharp recovery with low volume is indication of the fact that a lot of speculation activity is going on in the counter rather than a delivery based volume. So we
Okay.
completely avoid this stock as of now. On the contrary, we are of the view that if you have a stock, if you manage to buy it at a lower level, advisable to book profit and shift the entire capital and profit to some other sector and other stocks, but completely advisable to avoid this space right now.
Avoid this space right now at the peak. In fact, in case you're looking out, you can book your profits and shift your money elsewhere is what the suggestion is. Keep that in mind as Midesh is really looking at this space very, very closely and guiding you through too. Reliance Industries is now picking up pace. Remember, earnings come in today post-market hours, 1322 at 1.5% up in trade. Slowly and gradually, we are inching back from those, 1100 kind of levels, and now we are back at 1300. Slow and gradual recovery coming back onto Reliance Industries. Ahead of earnings, though, what's your expectation here, Mitesh? What would you do ahead of earnings for Reliance today?
See, the beautiful participation can be done with the help of out of the money call option. Okay, so the way by which the stock has panned out in the last 3 weeks, it's a clearly a heart of higher bottom formation and around 1330 level, 1330, there is a multiple resistance. So the first resistance was created on 6th of December 2024, where the high was 1329.95. Second resistance was created on 17th of January 2025, 1326, and right now the stock is trading at 1322 or 1325. The bottom of the story goes like this, that if 1330 is taken out on the hourly chart, probably the next halt or pause at 1500 levels. So I am looking at a very big upside in Reliance going forward technically to the tune of 8 to 10%. But looking at the market condition and the way by which tensions are going between India and Pakistan, things are silent right now. We may be of the view that probably there won't be any action or retaliation from the Indian side. But when things are absolutely calm and slow, sharks even need to be exceptionally careful. So we are of the view that if you want to participate right now, I think call and puts on the buy side, not on the sell side, are the preferred bets where your losses are defined from day one. So rather than going for a future participation, if you're a compulsive trader, even if you want to bet against Nifty or in favor of Nifty or any frontline stock, advisable to participate through call and put on the buy side. So I recommend out of the money or at the money call buy for Reliance to participate going forward. I do see 5 to 7% upside in next 10 to 15 days.
Okay, we'll definitely keep an eye out on the entire aspect, and do definitely remember. And the market breadth is swiftly changing towards the declines now, viewers. You have India weeks that's down 1.2%, but despite that, barring IT and auto, rest of the sectors have all slipped in trade. We have sharp losses on PSU banks, a percent lower. Small caps have slipped a percent. Private banks are down 0.7%. Pharma is down half odd percent. Nifty Bank has quickly slipped lower 0.3%. Oil and gas, realty, financial services, consumer durables, all of them have slipped. Barring just half odd percent gains remaining, 0.7% gains remaining on IT, and flattish with a positive bias remaining on autos. Rest of the pockets have all slipped. SBI Life, HDFC Life, Reliance Industries, TCS Infosys remain as the top movers. PSU stocks have actually swiftly turned red. You can also see a decline on the Nifty as well. We are now at 24,266, just about 20 points higher. Autos have also now slipped into the red. Barring IT, all the sectors are all red in trade right now. Oil India, Coal India, Container Corp, NMDC, ONGC, HAL, IRCTC, NTPC, all these stocks have actually turned lower in trade. Let's look at the broadest index to see where there are some sharp moves on the downside. We have, of course, Gensol Engineering continues to reel under the pressure that it has been facing. SBI Cards is down in trade. You have some other names, L&T Technology Services, that's down in trade. Sharp moves on the downside on the FNO pack, on the Nifty 500 pack. On the Nifty, next 50 names also. You only have Macrotech, Tata Power, Adani Power, some power related stocks still holding up, IT related some stocks still holding up. Macrotech from the real estate pack still up and about, but most of the stocks have also turned swiftly lower in trade. First 15-20 minutes out in trade. Mitesh, you were already anticipating that there could be some kind of a move on the downside. What does the current level tell you?
Exactly, Sakshi. This is what we have advocated in the beginning of the show that when the Nifty was up around 112, 115 points, that this move will not sustain. Again, I think traders and investors should not take this India-Pakistan recent development very lightly. They should take it seriously. And I am of the view that we are here for a very serious correction in the month of May. So advisable to be very cautious. Please be very disciplined with your stop losses. And if you are not comfortable, don't put a lot of your money into your trade. Wait for the opportunity. I think in the mid of May or probably at the end of May, we will see a decent opportunities, stock specific and sector specific. But Sakshi, for the first 15 days, advisable not to participate, go for a vacation or sit on the sideline. Maybe these 15 days are absolute learning point for you, and probably you would be better off participating in the second half of the May 2025.
Okay, got that. Things could actually be very, very dicey at this point in time. So keep an eye out on how the markets are shaping up. We are just 1 point high in trade. The Nifty is slipped into the red now, 24,247. That's how we are shaping up at this point in time. We also have. Some stocks that we can mark out for our viewers on the positive end, even at this point when most of the markets are slipping. From the broader markets, I'm just going to take some names. IEX, we've already marked, it's at a 5% circuit. You have Sadbhab Engineering, that's up. SBI Live we've marked for you. That's the strongest counter that we have today on the Nifty also. Kesuram Industries is another one that's actually up and about in trade. But very few names that you can really count and really look at this point in time. And just like how Mitesh ji is saying that not every day and not every week needs to be traded. Macros are changing, situations are changing. So just be very cautious with your, money at this point in time. Things are dicey. You don't need to participate on an every day or every week basis as well. Let things come out in open. Let things settle down. We don't know what's coming. Every day the situations are changing on the geopolitical front. So you need to keep an eye out on that. But what's doing well is clearly the life insurance names. TCS is pulling up 1.2% higher, is one of the key contributors on the Nifty, and of course the IT space. Infosys is also up. Reliance Industries is now probably taking the baton in their hands, but most of the stocks have slipped. Look at I think there are only 8 to 9 stocks on the Nifty that are still holding up in trade as of now. Titan, HDFC, ICICI Bank, HUL, Maruti, JSW Steel, for that matter, Bharti Airtel, ITC. These are the stocks that are moving up in trade at this point in time. Very, very few names that you can actually literally count on your fingers at this point in time. Banks for you, Mitesh, how are you looking at the large private sector banks versus the PSU banks at this point in time? We've seen a move come in on the private sector banks post earnings, but how is the situation between the both?
So I think one is a long and one is a short trade. So extreme for the extreme short term, for example, for next 3 to 4 days or 5 trading sessions, you can go short on the private banks and long on the PSU banks because PSU bank is offering that kind of a cushion right now technically. But as far as private bank is concerned, I am of the view that profit booking can be seen in Kotak and HDFC at the higher level.
Okay, we'll definitely look at that as well. Let's also pull up some of the other names that we can discuss. On FMCG pack particularly, Mitesh, do you have any thought process here? Earnings have largely been probably muted, if I can call them, HUL and, both Nestle. But overall, what's your expectation on this FMCG space particularly? We were talking about domestic themes, consumption themes quite a lot, but nothing so far has been proven that this space will actually give you consistent returns. So how will you look at it?
So fair point, Sakshi. So from the high of 66,438
Yeah.
on 26th of September 2024, FMCG index witnessed a very sharp correction and made a low at 50,546. After that, there is a vertical rise, but now a very strong resistance can be seen between the range of 58,000 to 60,000. So I am of the view that FMCG stock, be it a Nestle or a Colpal or a Britannia or Marico or Tata Consumer, all the stocks, including Hindustan Unilever Limited, will go for a consolidation phase. And I think if you have a patience for at least 2 years, this is an excellent time to accumulate these stocks because probably the stock, all this, the entire space will go for a consolidation. And after that, we may see a vertical rise again. So if you ask me for the next 3 to 6 months, probably the answer is no. In terms of like accumulation, the answer is yes. But do you see any upside? The answer is no. But at the year end, from 9 to 12 months view, yeah, the space will give you decent return. So for the first 3 to 4 months, just accumulate the stocks because the entire space will spend a lot of time in accumulation, which probably will be boring for and frustrating for the investors. But in the later second half, probably after 9 months or 12 months, we may see the same space is delivering a very strong return. So probably at the end of financial year Saxi 2025-26, we may be discussing FMCG index at an all-time high. So 9
Okay.
to 12 months view is very bullish.
Okay.
3 to 6 months view is consolidation.
Consolidation, and then probably there could be an outperformance by the end of the year, and that's where we could be probably looking at an outperformance and earlier high levels being tested, and of course superseding that as well. So we'll keep that in mind for FMCG. Now is the time over the next 6 months to look at some consolidation taking place and thereafter some move. Okay, let's look at the markets. A half odd percent of a decline from the all-time from the day's high point for the Sensex. 400 points of a decline from the day's high is what we have seen. Even the Nifty is now slipped below 24,200, 50 points lower in trade. So that opening tick of pre-open that was being seen is something that is getting reflected now after the first near half an hour is out on trade. IT remains the only pocket that sees some green. Along with it, life insurance names that are holding up in trade, but rest of the pockets have all slipped. It's India VIX that has swiftly climbed up, now over 1% higher, 16.4. So keep an eye out on volatility. This is the one that you really need to watch out for. This is the first day of the May series viewers that we are looking at. But as Mitesh says, there could be a lot of volatility over the next 15 days. So keep an eye out on that. Instead, keep your money safe. Don't need to participate every day in the markets, and just be very, very cautious at this point in time as well. Mitesh, if one really has to look at still some opportunities to invest in for the long term, have you identified any stocks that you could share with us?
So two stocks goes for the metal space.
Okay.
First is Steel Authority, SAIL. So if you look at the chart pattern of SAIL, a stock is spending quality time between the trading range of 125 on the upside and 100 on the downside. So it's a pretty strong consolidation phase which has started from January 2025. So I think 4 months of a consolidation phase now I think is enough for the stock to move up. And what all we are waiting for is a stock to close above 125. Once the stock close above 125, then there is no looking back. First target on the upside will be 145, followed by 160. So this is the first stock which we are looking at from the metal space. Second is a Hindalco. So Hindalco also there is a vertical fall from the high of 750, and then the stock has made a low of 546. After that, there is a bit of a bounce, but not that encouraging. We are of the view that once the stock close above 650, stock will enter into a new trading range, and probably the first pause after that will be at 715 followed by 800. So SAIL and Hindalco is what we are looking at from the metal space.
SAIL and Hindalco, metal space is something that Mitesh is definitely keeping an eye out on, and we'll also focus on that as well. Mitesh, thank you so much for being with us in the morning edition and helping us with all your views on various spaces that we've talked about. But Mitesh, more importantly, what you've marked out for all our viewers is extremely important. Be cautious at this point in time. There could be a lot of volatility and caution that needs to be prevailed over the next 15 days odd because of the geopolitical tensions that are emerging. That's something that things could change, by the minute, by the hour, by the day, and one needs to really keep an eye out on that. Globally, things are slightly improving on the tariff front, and therefore you are seeing an improvement come back on the Asian markets and the US markets. But what's happening closer home could be also very important for all of us to really keep an eye out on. We'll keep that in mind, Mitesh, and we'll also keep in mind those metal stocks that you've really shared for all our viewers who are still looking to buy in this kind of a market and volatility as well. We'll leave you at that. that, viewers, wrapping up the morning trading session for all of you. Nifty now down by 0.2%, 24,200 and thereabouts it's hovering around. IT is the only space that is actually showing you some gains. SBI Life has also come off from its day's high, now 5% higher and lower than that as well. So the rally is now somehow fading. Even on Reliance Industries, it was up over 1%, and now you have 0.7% gains remaining. Far few between, just about 8 stocks that are holding up in trade. We'll keep an eye out on how things really progress from here, and if there are any signs of any further weakness, then we will definitely come and tell you that with our top market experts who are joining us. And of course, the earnings coverage will continue, and we will keep talking to you about, and the management's about, as to what to really look forward to in the upcoming quarters as well. Stay tuned. There's a lot more for you to really track through the course of the day.